Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, January 25th. Hey, we got some data to go over, so let's try and jump right into it. We'll start off with of course, our weekly jobless claims. So last week, as you recall, we had a really low number here at 216,000 people applying for unemployment. Forecast for this week, they thought have a pretty big uptick to 240, but it came in much lower than that at 233,000. So still a good number here. We've been kind of in this range to begin with, and then we saw for a few weeks there a spike way up to like 250, 260 range, and then we had that 216 last week, which I think kind of surprised a lot of people. Now, because of that, of course, now they're thinking that perhaps January could be a strong jobs number. So next few weeks when we get the jobs numbers, it'll be interesting to see how many jobs were created. Now, to kind of continue on here, we also have the new home sales for the month of December. We had a pretty big number that popped up for November, but that was actually revised lower. It was actually over 700,000, and it was dropped down to 608, revised lower to 689, which is still a very good number here. Now, forecast for the month of December was at 679,000 for new home sales, but came in much lower at 625. So that kind of course, disappointed investors there. Percent increase in leading economic indicators, and forecast supposed to continue another 0.5%, and it went up 0.6%. This is kind of showing us that our economy is really starting to take off a little bit here, and so people are feeling good for all the right reasons that things are moving a much greater. So as what the leading economic indicators are pointing towards. So let's kind of jump over here to the headline news. We currently got the stock market up. It's been really a seesaw action day again. We've been getting a lot of that this week. Stock market was way up. The Dow was actually pretty high this morning, but so far they've kind of pulled back a little bit. They're kind of comments getting out there like Bank of America's analysts over at Bank of America Merrill Lynch have made comment thinking it's frothy, but not really to their liking a little bit. That maybe it's just going up too fast, and that maybe it should have some more pull. And it's starting to look like it might be wearing down a little bit. A lot of investors, because we've been getting almost every day, it seems like they're closing at new highs, and it seems like they're starting to wear down a little bit, and that we might have at least a slight pullback. I don't know about a correction, but at least maybe a slight pullback before it gains more steam. But in the meantime, it looks like it could take a little bit of a breather here coming up, even though we got some good earnings reports that came out earlier today for quite a few corporations. Then last but not least, we had the ECB. They had their meeting today. They left their rates unchanged, and then basically announced, if you recall yesterday, there was rumors that they may pull their their asset purchasing, like bonds and mortgage-backed security type of thing, sooner than later. And they basically announced that they are going to continue it until December. They had extended to September, and they said they'll go on until September, and if needed, longer. So it can be extended. So he left that on. That's why the global yields took off quite a bit yesterday. While we had a big uptick in yields yesterday in mortgage-backed securities, as a result, kind of pulled back quite a bit as a result because the money is leaving mortgage-backed securities into those yields. So, but he also made another comment, which I'll touch on here 1 second here. Excuse me. So we'll look at the bond market here. As you can see, we started the day off higher. Right now, we're up about 8 basis points from where we left off yesterday. So we're still above this. We were able to close above the first level of support. Now, as you can see, this long line here, it had a huge drop after Mario Draghi had made a comment saying that inflation will kind of remain intact, but later on he expects it to take off. So that kind of spooked the bond market because anything to do with inflation, any increase of inflation erodes the value of the bond, and that spooked them, and that's what created this whipsaw effect down at a negative. We were actually down below like 17 basis points at one point, and even probably further. And since then, we've kind of pulled back a little bit as the stock market was much higher, and that's pulled back, scaled back a little bit. So a lot of that money is going from the stock market into the bond market, which is kind of helping us out here. And then on the other hand, we also got the yields here, and they pulled back a little bit. So as you can see, we were challenging that for second level of resistance here and pulled back, and now we're down to here, we're just below the this first level resistance down the 2.62 range, which is obviously good for us if we can close below that and hopefully stay below that with interest rates. Because again, if we go above this 665 level is going to knock us. We have plenty of room. This becomes a floor support and have plenty of room to go up to like the 3% range. And that would not be good for bonds because that would only drive bonds further lower and hence basically keep increasing the interest rates. Interest rates will continue to climb. So basically, anytime you see bonds go down, rates rise. So that's kind of where we're at right now. So luckily, our rate below this level, we'll kind of see where we close. Lately this week, as we've been kind of indicating, it's not where you start, it's where you finish because we've been getting a lot of seesaw action of late, a lot of volatility. So just be careful if you're playing any of these markets, whether if you're floating, you're in a transaction and you're trying to float an interest rate to get a better rate, be careful. Just like the stock market and treasuries, a lot of volatility going on right now. All right, folks, you guys have a good rest of your day. That pretty much concludes it. Sorry about that. We touched on that yesterday. But if you guys want to get more updates, just come over to Twitter. I do post updates on Mike Bjork is my handle, and continue to post throughout the day. Otherwise, have a great day. I look forward to see you guys tomorrow, and thanks so much for watching. Bye-bye.